Welcome back to Market Mindset AI, where we break down the market's latest moves and what they mean for you. I'm your host, Big Money Mike, and today we're diving into some heavy hitters. Netflix's massive subscriber growth, Rocket Lab's role in the booming space economy, IES Holdings' bold credit expansion, and a closer look at CrowdStrike's position in the cybersecurity world. Grab your notepads, because we're getting into the details today. Let's start with the big picture. The market saw another strong week, with tech stocks leading the charge thanks to AI momentum. Companies like Nvidia, Alphabet, and Amazon are riding the wave as AI infrastructure spending surges. Nvidia's GPUs are the brains behind the biggest AI projects, while Amazon's AWS and Google Cloud battle for dominance in hosting. But the real shift? The market is pivoting from a Fed-driven narrative to a Trump-driven one. Trump's economic initiatives are focused on domestic production, reshoring, and massive infrastructure investments. While that could bring opportunities for industrials and tech, it might create headwinds for international sectors if tariffs escalate. Apple is one notable loser here. Weak iPhone sales in China, down 25% in Q4, have sent the stock tumbling. This reflects both consumer slowdown and fierce competition from Chinese brands like Xiaomi. My take: the AI boom is exciting, but don't ignore macro risks. Trump's policies could swing the pendulum quickly, so stay nimble and watch for sector rotations. Let's talk about Netflix, which added a staggering 19 million subscribers in Q4. That's more than double expectations, and it's not just about binge-watching anymore. Live programming, including NFL games and high-profile events like the Mike Tyson fight, is drawing in new audiences. Revenue surged 16% to $10.2 billion, and operating profit climbed 50%. An incredible feat for a company that many critics thought had peaked. But here's the genius part. Netflix is raising subscription prices in key markets, boosting average revenue per user. What about competition? While Disney and Paramount are bleeding from linear TV losses, Netflix is doubling down on exclusivity. Their foray into gaming, particularly cloud gaming, could open an entirely new revenue stream. My opinion: Netflix isn't just surviving, it's thriving. They've turned subscriber growth into a science and are leveraging their scale to dominate the streaming wars. If gaming and live sports gain traction, this stock could go from strength to strength. Rocket Lab is quickly becoming the go-to name for small satellite launches. Their upcoming Electron mission for Kinney's will deploy IoT satellites, supporting industries like agriculture, logistics, and climate monitoring. Why does this matter? The IoT market is expected to reach $1.1 trillion by 2030, and Rocket Lab's reliable small satellite launches make them indispensable for this growth. But the real game changer is their Neutron rocket, designed for mid-sized payloads. This positions Rocket Lab to compete directly with SpaceX for larger commercial contracts. Financially, Rocket Lab has maintained strong margins compared to other space players. Their vertically integrated model, from manufacturing to launch, gives them a competitive edge. Here's my take: Rocket Lab is speculative but promising. If they can execute on Neutron and expand their market share, they'll be a force in the rapidly growing space economy. IES Holdings, IESC, just doubled its borrowing capacity with a $300 million credit facility. This shift to a cash flow-based model signals a new chapter for the company. But why does it matter? IES specializes in electrical and technology systems for booming sectors like data centers, residential housing, and industrial construction. These are high-growth areas, especially as demand for AI infrastructure and housing remains robust. The expanded credit line will allow IES to accelerate acquisitions, pursue growth opportunities, and enhance shareholder returns through buybacks. For a company with consistent revenue growth and exposure to critical industries, this financial flexibility is a game changer. In my view, IES is setting itself up for aggressive growth. If they execute, this could be a name to watch in industrial tech. Now, let's talk about cybersecurity, a sector that's more relevant than ever. CrowdStrike, ticker CRWD, is a standout here. Why? Cyber threats are escalating as AI adoption grows, and CrowdStrike's Falcon platform leverages AI to deliver real-time threat detection. Recent partnerships with government agencies and major corporations have strengthened their reputation as a cybersecurity leader. Plus, their annual recurring revenue, ARR, has been growing at an impressive clip, signaling strong customer retention. What makes CrowdStrike a potential buy? Their ability to innovate in a crowded market, a robust balance sheet, and expansion into mid-market and international segments. But there's competition. Companies like Palo Alto Networks and Zscaler are nipping at their heels. That said, CrowdStrike's positioning in the AI-powered cybersecurity space gives it an edge. For long-term investors, this stock has plenty of room to grow. That's a wrap for today's Market Mindset AI. From Netflix breaking records to Rocket Lab's ambitious plans and CrowdStrike's cybersecurity prowess, the market is buzzing with stories and opportunities. Thanks for tuning in. Stay curious, stay informed, and as always, stay in the mindset. This is Big Money Mike signing off. Catch you next time.